Across the US, the price of a tank of gas has been rising. Now, drivers could be in for even more pain at the pump. One reason? US sanctions on Iran.
Today I am announcing our strategy to confront the Iranian regime's hostile actions.
This November, the US is turning the financial screws on Iran, one of the world's biggest oil producers. Tough new sanctions will make the country's roughly 2.5 million barrels a day of oil exports toxic for buyers. That's a big chunk of crude to take out of the market, and means oil prices, only recently at their highest level in 4 years, could climb higher still. But the oil market is actually in a delicate balance, buffeted by both bullish and bearish forces. So what's actually driving the market right now? And could we see $100 a barrel oil again? Iranian exports have already tumbled in preparation for US sanctions. Supply from the country hit a 2.5-year low last month. Analysts say hundreds of thousands of additional barrels a day are likely to disappear in the coming months, with the US taking a hard line. Questions also hover over the production from an unlikely number of other big oil producers. Output from Venezuela has fallen by more than 1 million barrels a day since the end of 2015. Libya has endured years of civil war that periodically knocks out key parts of its oil infrastructure. In Nigeria, endemic problems of oil theft and pipeline sabotage routinely knock out export pipelines. And Iraq has experienced increased unrest in its key oil-producing hub of Basra. Further disruptions in those countries could take more oil off the market and drive prices higher. We've also seen the amount of oil held in storage fall, eating away the glut that sent prices tumbling in 2014. As recently as 2 years ago, oil prices fell below $30 a barrel, as soaring production from US shale producers left the world awash with crude. But there are also drivers that could send prices lower. Producers are working hard to increase output and make up for any shortfall. OPEC, a coalition of the world's biggest oil producers, has teamed up with others to cut back production when prices were low. But recently, they've opened the spigots back up. Shale production in the US is also still on the rise. So far, that's been pretty successful in filling in any gaps in supply. Also, global economic growth is slowing, and that normally puts a dampener on oil demand. Already, important market watchers like the International Energy Agency are predicting that global demand for oil will soften. That eases the pressure on global supply. Those forces, together with a broader rout in global stock markets, have helped drive prices lower in recent weeks. Even OPEC isn't sure of the best course of action, flip-flopping between tightening up production once more or continuing to open the floodgates wide. So with less demand and more supply, what's the big deal? Well, even though the world has enough oil supply at the moment, there isn't much of a cushion if anything goes wrong. That leaves the oil market balanced on a knife edge, with the prospect of $100 a barrel and more pain at the pump looming large.